In a rapidly changing world, cryptocurrency remains a key area of focus as Bitcoin and Ethereum face significant market shifts. In today's countdown, we will explore the latest developments in the crypto space, including regulatory changes that could reshape the landscape. Here are today's top 10 stories you need to know. The cryptocurrency market is responding to a wave of news updates, influencing price movements across various assets. Investors are closely monitoring headlines to gauge potential impacts on their portfolios. The reaction to news events can lead to rapid price fluctuations as traders react to both positive and negative developments. Understanding the sentiment behind news stories is crucial for making informed trading decisions. As the market continues to evolve, the ability to interpret news and its implications will be a key factor for traders. The fast-paced nature of crypto news means that staying informed is essential for anyone involved in the market. Looking ahead, market participants will need to remain vigilant and adaptive to navigate the complexities of the cryptocurrency landscape. As Bitcoin and Ethereum dominate the cryptocurrency conversation, altcoins are also beginning to capture attention. Recent market trends indicate that several altcoins are gaining traction and showing signs of strength. This shift could signify a broader rotation of capital within the crypto space, with investors diversifying their portfolios. Analysts are exploring the potential for altcoins to outperform during periods of Bitcoin stagnation. The rising interest in altcoins highlights the dynamic nature of the cryptocurrency market and the importance of staying adaptable. As new projects and technologies emerge, investors have more options than ever. The ongoing developments in the altcoin sector will be critical to watch as they could reshape market dynamics. Consequently, understanding these trends will be essential for investors looking to maximize their returns in this rapidly evolving landscape. The cryptocurrency market is currently grappling with significant volatility, driven by a confluence of regulatory changes, shifting macroeconomic indicators, and fluctuating trader sentiment. Recent regulations proposed by governments worldwide aim to establish clearer guidelines for digital assets, which many believe could stabilize the market in the long run. However, in the short term, these developments have created uncertainty, prompting investors to reassess their positions. This environment of unpredictability has led to increased trading activity as some investors attempt to profit from rapid price movements. Yet, the risks inherent in such a volatile landscape are substantial, underscoring the importance of diligent research and risk management. As the market continues to mature, stakeholders must remain vigilant and adaptable. The growing interest from institutional investors may help provide some stability, but participants should prepare for ongoing fluctuations as regulatory clarity unfolds and market dynamics shift. XRP's future price predictions are generating significant interest among investors and analysts alike. Recent forecasts suggest that XRP could reach $20 by 2029, indicating a long-term bullish outlook for the cryptocurrency. This optimism is largely fueled by XRP's potential applications in cross-border payments and remittances, areas where it could significantly streamline transactions. As regulatory clarity improves, particularly following ongoing legal disputes with the SEC, XRP's role in the financial ecosystem could become more pronounced, potentially setting it apart from other cryptocurrencies. However, the path to such ambitious price points remains fraught with challenges, including market volatility and the need for broader adoption. Investors are carefully weighing the risks and rewards associated with this digital asset, considering both its technological advantages and the uncertainties that lie ahead. As XRP continues to navigate its complex legal landscape, its price trajectory will be closely monitored. The coming years will be pivotal in determining whether XRP can fulfill its promise as a cornerstone of the future financial system. Large movements of cryptocurrency by so-called whales have been making headlines recently, raising concerns about potential market manipulation. Whales, individuals or entities controlling vast amounts of digital assets, possess the power to sway prices significantly with their trading decisions. Recent reports highlight several high-profile transactions, which may indicate forthcoming shifts in market dynamics. Historically, Whale movements have been associated with increased volatility, often igniting investor speculation. Analysts suggest that when whales accumulate specific assets, it may signal bullish trends, attracting more retail investors. Conversely, large sell-offs can trigger panic, suggesting bearish sentiment that may lead to broader market declines. The scrutiny of these activities underscores the ongoing debate about the need for transparency and regulatory oversight in the cryptocurrency space. As the market continues to react to these whale movements, investors are urged to stay informed and analyze trends closely. Looking ahead, the behavior of these whales could play a pivotal role in shaping market conditions throughout the coming months. The decentralized finance exchange Pepeto has announced a comprehensive security upgrade designed to enhance user trust and safeguard digital assets. With the DeFi sector experiencing explosive growth, security concerns have emerged as a paramount issue for investors. Recent high-profile hacks, including significant breaches that resulted in millions of dollars stolen, have severely shaken confidence across various platforms. In response, Pepeto's initiative represents a proactive approach to addressing these vulnerabilities, aiming to create a safer trading environment for its users. By implementing state-of-the-art security measures, such as enhanced encryption and multi-factor authentication, Pepeto hopes to attract a larger user base and solidify its competitive edge in the rapidly evolving DeFi market. This move could set a precedent for other platforms striving to enhance their security protocols, potentially leading to industry-wide improvements. As the DeFi landscape continues to mature, the emphasis on robust security measures will likely play a crucial role in shaping user experiences and market dynamics. Ultimately, Pepeto's upgrade could catalyze a shift towards more secure trading practices in the DeFi ecosystem. In a noteworthy development, a new nonprofit organization has emerged to promote institutional adoption of Ethereum. This initiative aims to bridge the gap between traditional finance and the burgeoning world of digital assets. With a focus on tokenization and on-chain finance, the organization seeks to provide a dedicated gateway for financial institutions to explore Ethereum's potential. The establishment of this nonprofit signifies growing acceptance of cryptocurrencies within mainstream finance. As regulatory frameworks evolve, institutions are increasingly looking to integrate blockchain technology into their operations. This shift not only enhances efficiency, but also opens new avenues for investment. The nonprofit's efforts are expected to bolster Ethereum's position as a key player in institutional finance. As more entities seek to navigate the complexities of the crypto landscape, this initiative could pave the way for broader adoption and innovation across the sector. The organization's work will likely lead to increased collaboration between tech developers and financial institutions. In the coming months, we can expect significant advancements in Ethereum-based solutions tailored for institutional investors. As Bitcoin struggles to maintain its value amid increased market volatility, Ethereum is showcasing relative strength, which may indicate a significant shift in market dynamics. Recent analyses reveal that Ethereum is outperforming Bitcoin, with key indicators suggesting it could lead any potential market recovery. Unlike Bitcoin, Ethereum's price has managed to stay within the daily TBO cloud, a positive sign for its resilience and potential for growth. This divergence between the two major cryptocurrencies raises important questions about future investment strategies, particularly as investors seek stability in uncertain times. Furthermore, ongoing developments in Ethereum's infrastructure, such as the transition to Ethereum 2.0 and its growing adoption across various sectors like finance and gaming, reinforce its position as a leading digital asset. Investors are now carefully weighing the implications of this shift, considering how it might affect their portfolios and long-term strategies. As Ethereum continues to gain traction, market participants will be keen to see if this trend can be sustained. A sustained performance from Ethereum could reshape the broader crypto landscape, potentially establishing it as a new benchmark for digital assets. Bitcoin has recently slipped below the daily TBO cloud, signaling a potential bearish trend. This decline follows a tumultuous period where Bitcoin experienced significant price fluctuations, struggling to maintain upward momentum. Market analysts attribute this volatility to a combination of macroeconomic factors, including rising interest rates and regulatory scrutiny affecting investor confidence. Despite the downturn, some indicators suggest a possible market bounce may be on the horizon. For instance, the daily TBO slowline is flattening, and the on-balance volume is showing signs of improvement, which could indicate a potential reversal in sentiment. However, traders remain cautious, as previous attempts to rally were met with heavy resistance, leading to skepticism about the sustainability of any upward movement. The current environment places Bitcoin in a precarious position, raising concerns about long-term investor sentiment. If the market fails to recover soon, it could lead to increased selling pressure, exacerbating the current bearish trend. As observers closely monitor price movements, Bitcoin's next moves will be crucial in determining whether this is a temporary setback or a signal of deeper issues within the cryptocurrency market. A decisive rally could reinvigorate investor interest and stabilize the market in the weeks ahead. The U.S. Securities and Exchange Commission has unveiled an ambitious rulemaking agenda aimed at cryptocurrency regulation. This new agenda, which adds at least 10 items to the current framework, is designed to address the evolving landscape of digital assets. As the cryptocurrency market continues to grow exponentially, regulatory bodies are recognizing the urgent need for comprehensive guidelines to ensure investor protection and market integrity. The SEC's initiative comes amid increasing scrutiny of crypto exchanges and the broader ecosystem, particularly following high-profile scandals that have shaken public confidence. Many industry leaders are hopeful that clearer regulations will provide a more stable environment for innovation, enabling startups to thrive while protecting consumers. However, some critics argue that excessive regulation could stifle growth and drive businesses offshore, potentially undermining the competitive edge of the U.S. market. The SEC's efforts signal a significant shift in how cryptocurrencies will be governed in the United States, marking a transition from a largely unregulated space to a more structured environment. Stakeholders are now closely watching how these regulations will impact market dynamics and investor confidence. As the SEC moves forward with its plans, it is crucial for industry participants to engage in dialogue to shape a balanced regulatory framework that fosters growth while ensuring security for all involved. Thank you for joining us for today's top stories in the world of cryptocurrency. Which story impacted you the most? Don't forget to like and subscribe for more updates.